Welcome back, you legends. I'm Dr. Cal, and long time no see. It's been a minute since my last upload. I missed you guys to death, and my wife loves you because she got me a brand new mic for the channel. If you noticed an improvement in the audio, please tell me in the comments. So let's get right into it. Do you guys remember this? Do you remember this? I talked about it in my last two videos, and quite honestly, we are still in the middle of that violent melt up following the volatility contraction pattern that I discussed in the last couple of videos. And quite honestly, pretty much no one believed it would happen. But here it is. We're still in the middle of this massive melt up following the contraction and volatility that took months. It was developing for months and months and months. And if you watched either of my last two videos, you will remember this exact pattern. Let's take a stroll down memory lane for a minute. Take a look. Now, there's a tale of two markets, the NASDAQ and the S&P 500. And unlike the S&P 500, the NASDAQ has been grinding higher with a clear price target on the chart that I talked about in the last video. The NASDAQ continues to see volatility contracting, forming what is commonly known a volatility contraction pattern. These are very rare, exceptionally explosive patterns. And even though the S&P 500 has been dragging its feet, the NASDAQ has been inching higher. Now, these volatility contraction patterns do not last forever. They always end with a volatile, very violent move. Now, the volatility contraction pattern is actually an age-old pattern that traders described as early as 1911, believe it or not, but it has been recently popularized by Mark Minervini, a multi-time US investing champion. And in fact, he relies almost completely on this exact pattern to generate his outsized returns. Here it is. Pullback, shallower pullback as the market continues to grind its way up in what initially looks like a bearish wedge pattern. Then it hits resistance and it breaks to the upside. So there you have it, folks. Number one, do you notice a change in the audio? If you do, please tell me in the comments, because this is the first really new video with a new mic. And number two, we are still in this massive melt up move, really led by tech and the NASDAQ, while the S&P 500 continues to drag its feet. Let's take a look at the daily chart for the S&P 500. Really sideways action for months. Then we had that breakout in the middle of May as the NASDAQ was building this volatility contraction pattern. Then we had that breakout, picture perfect backtest by the NASDAQ, resistance rejected, broke through, backtested, continued to melt up. We are now forming a bull flag, and we are still really going bananas. And quite honestly, I haven't made an upload since my last couple of videos because we are still in the middle of this melt up. It hasn't ended. The monster rally is still ongoing. It has not ended. We can still expect even more insane moves to the upside, especially in the NASDAQ. Now, if we take a look at the SPY, PPO really hovering above the zero line, barely. Sideways momentum, not really that exciting. However, the histogram has been improving. We have been making notice, guys. Low, slightly higher, low, slightly higher, low, slightly higher, low, boom, higher, low. What does this remind you of? It looks exactly like the NASDAQ before it had that explosive move. In fact, let me show you the NASDAQ composite, because this chart really summarizes it very well. This is the NASDAQ composite, which is quite different from the NASDAQ 100. It includes all of the stocks in the NASDAQ index. And what do you notice? Low, higher, low, slightly higher low, grinding up, slightly higher, grinding up toward resistance. Then we have that massive breakout, perfect retest, and continuation. We have hit our first target on the NASDAQ composite, and that's 13,000. The next target, which I expect to be hit by the end of the summer, really is around these prior highs, around 14,600 to 14,500. And if we take a look at the SPY, we have also hit our first target, the gap fill of 422. I'm talking about this gap left from August 19th. We filled it. really today on the close for the first time. Got really close. I would consider that a fill. And the next target really, guys, is the gap fill at 428. Tomorrow we'll have the unemployment rate and the non-farm payroll. So two critical economic drops tomorrow. And if the market reacts positively, we will get a fill of that gap at 428 and continue to see the NASDAQ leading. Now, guys, throughout the last month and a half, guys, we really haven't shorted anything in the market except one stock that I discussed in the trading community, and that was Pepsi. It was a beautiful setup to short from 195 to around 185, and we got that target. Otherwise, really not a lot of shorting opportunities, so we've been going long. A lot of setups, beautiful setups, and in fact, May has been one of the best months for us. Absolutely incredible. And I'm very excited, guys, to do this for the first time on the channel. I'm going to give you a very quick trade recap of all the key trades that we took in the last month. And let's start with Netflix. We had a beautiful bullish pennant on Netflix that broke out on May 11th. Then we had a perfect back test May 17th, and that's exactly when we entered the trade. Here it is, May 17th, Netflix bounced off our backtest level. This confirms the breakout. We had a target of 405. We got that target today. So beautiful trade. If you traded this with options, even if you went out several months out in time, this was a 2x trade. Another beautiful setup was in Amazon. Volatility contraction pattern melt up continues. Target remains at the next resistance level of 122. Here it is, guys. Beautiful volatility contraction pattern, higher lows, consecutive higher lows, melting up, inching towards resistance. Then we had that beautiful breakout backtest, and we continued higher. Another beautiful, absolutely gorgeous trade. We got our target of 122. Again, this is the first target. There's a second longer term target that I discussed in the trading community. And again, this was another beautiful 100% trade if you used options. Let's take a look at the big boy Tesla. Beautiful, beautiful. I did a really detailed analysis on this stock a couple of weeks ago, and I'm absolutely amazed at how accurately it all played out. It was a beautiful, beautiful trade. And here it is, guys, entry of 177.5. And then we had a close above resistance, multi-month resistance with a target of 210 to 215. We're getting super close to that target. Here it is. This was the breakout, multi-month resistance here. We had an initial false break back here, guys, in late March. Then we continued to find resistance at this trend line. We had the first break really in months on May 18th. And what do you notice, guys? Look at this. This is the Money Time Machine Smart Money Flow Indicator. And we got a buy signal on May 17th right here. And we've been melting up since. By the way, guys, I had this channel drawn well before this melt up. It initially looked like this before we had, when we had these breakouts, and I explained in detail why I doubled the width of this channel. And we got a perfect tag of this channel several times so far. Target still remains at 210. And I also have another longer term target for Tesla, again in the trading community. And I want to give a big shout out to our legends in the trading community. Absolutely killed it this month. Griff up nearly 100% on Amazon. Mr. G Mint, look at this, up $400,000, 500%. By the way, guys, these are entirely his trades. All I do, guys, in the trading community is provide my trade setups, my technical analysis, and my commentary, and that's it. The goal of the trading community is for every legend to be able to make their own trades, manage their own risk, and grow their own accounts. And Mr. G Mint absolutely just killed it last month, up $500,000, 500% in a single month. Absolutely amazing. I raise my hat to you. Shout out to Prince K. He has been killing it. Double-digit gains consistently, trade after trade. Absolutely amazing trader. Skinny McKinney up 300%. Al traded Nvidia up 300%. Our resident legend and mod Ron absolutely continues to kill it. He's an amazing scalper. Consecutive double-digit gains trade after trade. And I really cannot go out without mentioning the Absolutely legendary Sir Sweet Jones. Look at these trades. $500,000 on Pan W, 20K on Tesla, $600,000 on Marvel, SPX, 30K Amazon, 30K. Again, guys, all of these are completely his trades. Absolutely amazing. Life-changing money. Congratulations. I have to give everybody a round of applause for a killer month. And it's been a pretty good month for me as well, up around 100%. And by the way, guys, my target is to double my trading account every quarter. So that's 100% in Q1, 100% in Q2. And so far, I was able to double my account in March. And I'm so thankful. Got really lucky with Tesla, Amazon, Netflix, and in a couple other trades. And was able to double the account just in the last month again. By the way, guys, I don't really recommend this for everybody. That's a very aggressive target. Doubling the account every quarter is absolutely kind of nuts, right? But that's been my target for the year and the overall year. I'm looking to 10x the account overall. So 2x Q1, 4x Q2, 8x Q3, and 16x. Not really just 10. I'll be happy with a 10x by the end of the year. And that's what I like to do, guys. I like to start with 25K to 100K in the trading account, 10x in a year, then take all of those profits, buy stocks, and start over with 25 to 100. And that's my personal preference on how I like to manage risk. When the account gets really large, $1 million plus, I do not like to trade options. I go and buy stocks. So it's essentially trading to grow the trading account, then using those profits to buy long-term investments. There are so many absolutely amazing opportunities right now for long-term investments. Some absolutely amazing companies right now making multi-decade lows. And even factoring in recession in the second half of the year, I expect these stocks to hold their lows. There are many ways you can manage this. You can actually dollar cost average over 10 months. That accounts for all the potential risks of recession in the second half of the year. We just hit 18,000 subscribers, guys. We're about to hit our first year anniversary in the middle of June. The first ever technical analysis video that I uploaded was June 16th. So I'm super excited to celebrate this with every single one of you legends. I'm so thankful. And I do have a flight to catch in a couple hours here, guys. But when I'm back, I'll be uploading more frequently because I really feel bad about not uploading enough, even though the market really hasn't changed much since my last upload. But I did notice, guys, that a lot of you do like the more frequent uploads, even if the market hasn't changed that much. And I wanted to celebrate the 18,000 subscriber milestone and the 1 year anniversary with you guys, and that's why I decided to double it and give it back to you. And that's why I actually launched a 35% discount. This is absolutely the lowest membership cost I've done all year, $35.75 per month. If you go for the annual membership, it is billed at $429 per year, guys, and you have to choose pay annually at the checkout. Otherwise, the payment will be canceled. If you just want to try out the membership, guys, you can just opt for the monthly membership. So you can check out the community, see if it's a good fit, see if you like the analysis and the trade setups and all of that good stuff. And if you don't like it, all you need to do is just message me within the first 7 days and you'll get a full refund. Make sure, guys, to carefully read the perks of every membership, because the Living Legend membership is quite different from the Ghost Legend membership. That's why it's more expensive. And there's also a lifetime membership right here, Epic Legend. Check it out if you're interested as well. If you like the community and you like to take advantage of everything in the community, as well as the indicators that I've been creating for life, you could save a lot of money, because this is pretty much equivalent to a 1 year Living Legend subscription, and you get lifetime access to every single thing in the community. If you're brand new and you just like to try it out and you want to take advantage of the annual membership, same thing, guys. If you don't like it within 7 days, just message me on Patreon and you get a full refund. Just make sure to choose pay annually at checkout, otherwise the payment will be declined. The goal of the trading community, guys, is really all I do is provide my analysis, my trade setups, my indicators, my charts. You can use pretty much the entire ecosystem that I use to make my trading decisions. And the goal is for every single legend to be able to identify opportunities on their own, execute their own trades, manage their own risk, and multiply their own accounts. And that's why it makes me absolutely incredibly happy to see legends making $500,000 per trade in a single month. Absolutely nuts. It really makes me super happy. Congratulations, guys. You've been killing it. And again, what have you been noticing with the SPY? Pretty similar look to the NASDAQ volatility contraction pattern before it broke out. We had big swings, then these swings began to ease up, make higher lows and higher lows, and we're flirting with major resistance here, the August high. The reaction to tomorrow's economic numbers, the jobs and the unemployment rate, is going to be critical. If we get a positive reaction, I think we can get a gap fill at 428 very, very quickly. So let's run through these charts very quickly. NASDAQ initial target of 332, taken out immediately, back tested, continued to rally. We are now forming another bull flag. Momentum is going absolutely nuts. More upside still left throughout the market, especially in tech. Still more upside in tech, guys. Be very careful trying to short a massive melt up like this. This is not typical of a top, not quite yet. Usually in a massive blow off top, you want to see something that looks like this. Then an enormous doji candle or a massive rejection candle at the top. We're not quite there yet, guys. We've been in a very bad bear market for quite a long time. And it's so much easier to make money on the way up. So just take advantage of these massive, massive rallies. And you don't have to go crazy with the indices. It's a stock pickers market. And there are some specific stocks that are showing really kind of crazy setups that I talked about in the trading community. Things like Netflix, Tesla, Amazon, and particularly another hidden gem in the software space that I discussed in the trading community. And in fact, I initiated a trade today. I bought some of that good stuff today. Let's take a look at the 1 hour chart. The gray line, guys, is the 5-day moving average. And honestly, I was looking for something that looks more like this, right? A double bottom finds buyers at 414, 415, this prior pivot, this prior swing. But what ended up happening at the open today was we opened just above the 5-day moving average. We spiked through it, then we closed above it. And honestly, as soon as I saw that, I ended up going long that specific stock that I talked about. And this really highlights the strength of the trend, especially as the stochastic found a bullish cross above the oversold territory. That tells me that this is a significant low and that we are still in a larger uptrend in the market. Let's take a look at the BPSPX. We are still in oversold territory. So even though the market really has been grinding up, moving slightly sideways to up, we're actually in oversold territory. So when we see the BPSPX cross back above the 38.4 level, that could actually mean even more upside, guys, even more upside. I was actually looking for 430 on the SPY before the end of the summer, and we might actually see that as early as this month. Absolutely crazy. Dow Jones Industrials continues to be weak. This market has been totally led by the NASDAQ, and that's what we've been focusing on, going long tech stocks, consumer discretionaries, and riding those beautiful setups. Less so energy, industrials, old style economy stocks, and basic materials. These still struggle. These will continue to struggle as long as the economy continues to slow down. Dow Jones Industrials up top, Dow Jones Transports down below. No divergence here so far. They've been moving in tandem since, let's see, May 24th. That's usually a good sign. We had a lot of buyers step in today. I expect this high to be taken out fairly soon here by both the industrials and the transports, and for the SPY to get into that 428 level very soon, perhaps within the next 5 trading sessions. Let's take a look at the VIX. Something absolutely incredible happened with the VIX. The VIX was forming this double bottom formation on the daily chart with a massive positive divergence. However, the close tomorrow could change all of that. If we take a look at the weekly chart, guys, something critical happened this week. We got our first negative histogram reading. This is intra week, so we don't know. Really, the close tomorrow is going to be critical. If we close like this, if we close with the VIX down, this tells me that the VIX will probably move all the way down to these lows of around 14 to 15 for into June, and that would mean more upside in the market. We had a couple of major rejections here on the weekly. The VIX has been failing to catch any bid here, guys. And as long as the VIX continues to go down, bears will struggle as long as the VIX is declining. High yield bonds up top, S&P 500 down below. No divergence. They're both moving in tandem, both moving up. High yield bonds did produce a bullish cross on the PPO today. That is usually bullish, guys. This is one of my risk appetite indicators, and it's flashing a buy signal as of today. If we take a look at XLY divided by XLP, one of the key charts that I've been watching really for quite a while, and it allowed me to catch those rallies in Tesla, Amazon, Netflix. And that's as soon as I saw this, guys, multiple rejections. Once we closed above it, that was it. Back tested, massive rally. It is still a market led by tech, XLY, etc. It's a repeat of 2021, guys, and late 2020. So crazy environment. Melt-ups all over the place, still no signs of a top yet, guys. I expect this to actually continue well into the end of the summer before the economy slows sufficiently enough for buyers to be cautious again. Meme stocks, again, look at this, guys. Momentum has been rising. It has been forming this bull flag / bull pennant. Watch for a break. Very soon, meme stocks will go flying again. So keep an eye out on your favorite meme stocks, things like GME, AMC, Carvana, etc. And keep an eye out on wheat stocks as well. Believe it or not, wheat stocks are about to enter a massive bull run. I covered this in the trading community about a month ago. Wheat stocks are going to go insane. The cycle in wheat stocks is about to start. So I'll keep an eye out on those. Just make sure to manage your risk. Let's take a look at copper to gold ratio up top. Still massive negative divergence. The S&P 500 will likely continue to move higher as the copper to gold ratio continues to make lower highs. I talked about this in the last couple of videos. I expect this divergence to last quite a while, well into late summer before the market finds a top. Same thing here, guys. Up top is the housing index, S&P 500 down below. We had a massive rally in the housing index stocks. We're actually back, almost back to the January highs. Look at this massive rally in the housing and in the home builders. That usually is a positive sign. No bearish divergence here, guys. We took out the February high. S&P 500 is taking out the February high, so no bearish divergence. It has been struggling a little bit the last couple of weeks, so that's something to keep an eye out on. But on the longer time frames, no bearish divergence here. Still looks like a buy the dip environment. Let's take a look at the value line index. Again, guys, I discussed this in the last couple of videos. I expect the value line index to make a slightly higher high here versus these highs here. So something that looks more like this. Still establishing negative divergence as the S&P 500 moves higher and establishes a higher high versus February, and I expect the value line index to fail to do that towards the end of the summer, and that will likely introduce a period of risk-off trading and selling. Let's take a look at gold divided by the SPY. I track this chart, guys, mostly for risk appetite by the dip kind of mentality. Usually when the S&P 500 begins to outperform, gold is usually positive, and we get that when we get a bearish cross on the PPO, on the gold to S&P 500 ratio, right? We had a bunch of these. I don't use it as much for sell side activity because it's been a little bit iffy. The PPO is still very negative, still below the zero line. It is trying to curl over. That's because gold has been catching a bit the last couple of days because yields on the dollar have been coming down a little bit thanks to the new debt ceiling deal. Here it is, gold tagged the support line. It's trying to catch a bid. I'm going to continue to watch gold very carefully here. I think gold will probably find a period of chop throughout the summer. The summer doesn't tend to be the best season to be trading gold overall. However, I think gold will continue to move higher towards the end of the summer and the end of Q3 as the economy continues to slow down and as earnings continue to come down. Here it is, the dollar found a top. It is now coming down. Same thing with the 10-year yield, found a top, is coming back down after the debt ceiling fears drove both the dollar and the 10-year yield up. It is now pulling back. Up top is the 2-year yield divided by the 10-year yield. I track this yield inversion curve because usually, guys, when the market exits yield inversion, that means when the yield curve goes back to contango and when the 2-year yield goes back above the 10-year yield, that's usually when you want to be exiting the market. That's usually when bad things happen. Here it is, guys. In 2006, we got a yield curve inversion. We exited inversion in late 2007. That's when the market found a top, and then we began the real bear market. Same thing happened in 2000, guys. Here it is, July of 2000. We exited inversion in January of 2001. That's when the market found a top, and then we began the real bear market. So far, guys, this entire correction, by the way, this is the S&P 500. This entire move to the downside has been just a correction, a reaction to the higher yield, to the Fed's rate hiking cycle. The real bear market starts when the market exits inversion, when bond traders begin buying long-term treasuries again. That's when things get really bad. Still not there yet. That will likely take about anywhere between 4 to 6 months to happen. TLT divided by SPY. This is the imminent doom indicator. We had a bullish cross several months ago. We haven't yet caught the 50-month moving average. That's when the crap hits the fan. When the TLT to SPY ratio trades above the 50-month moving average, the 5-month moving average, that's when things get really bad. That hasn't happened quite yet. We need to see TLT trade above the 5-month moving average. That will likely take several months to happen as the yield curve exits inversion. That's really the perfect time to exit the market if you're worried about recession and a massive crash. The money time machine CPC buy and sell signal put to call ratio still very negative. That means a lot more call buyers than put buyers. Momentum is still going down. No signs of sellers yet. Same thing with the PC. We're getting into overextended territory. However, the PPO is still very negative. No signs of put buyers yet. As long as the PC and CPC continue to go down, as long as momentum and the put to call ratio continues to go down, that would favor buyers, and that's still happening right now. Let's take a look at the New York Stock Exchange Summation Index. Really big negative divergence. S&P 500 has been moving up. In black and blue is the S&P. The New York Stock Exchange is in red and green. Still declining. S&P still rising, led by NASDAQ. And likely, guys, tech, discretionaries, those will lead the market up as the old style economy stocks like energy, industrials, and basic materials continue to go down as inflation continues to ease. NASDAQ composite key level, we got our first price target of 13,000. Next level to watch is 14,500. The NASDAQ composite summation index is still positive. It's been absolutely melting up, led by a number of companies. This is very weak breadth. I don't really like to see very weak breadth, and this continues to indicate that this will likely end very badly. The question is when, and really the best way to time that, again, is the imminent doom indicator. That's TLT divided by SPY, as well as the yield curve inversion, exiting inversion and beginning to steepen again. That's not happening quite yet. So this could last quite a while. This entire melt-up move could last quite a while before things really turn ugly. Here it is, S&P 500 50-day breadth, very negative. As the S&P has been moving higher, breadth continues to decline. 200-day breadth continues to decline as the S&P 500 continues to rally. This negative breadth is not really indicative, guys, of the end of a bear market cycle. Usually, guys, you want to see breadth improving as the market recovers. That's not happening. This continues to indicate that this entire melt-up move is going to end up badly. Just the question is when. And again, I'm looking at least the end of the summer before the economy deteriorates enough for it to matter again. Economic events tomorrow, guys. The unemployment rate and the non-farm payrolls at 8:30 a.m. Going to be a key market moving event. And really the two key things to watch, guys, fundamentally over the next several months is going to be the unemployment rate. As long as it stays low, the market will continue to move higher, and earnings. As long as earnings stay flat to okay, the market will continue to move higher. Bears will remain in hibernation until the unemployment rate begins to shoot up. and we get that earnings decline of 20+%, that earnings recession. As long as that continues to delay, and if the Fed pauses at the next meeting in the middle of June, if that happens, it is less likely that the unemployment rate will rise. It is less likely that earnings will suffer all that much. And if they start cutting, it is even less likely. Fear and greed at 68. Again, we watched the 75 reading to find a top. Not quite there yet. The market will likely continue to melt up in a really crazy move. Guys, the market will likely top at a point where all of us will be shocked. It will probably go absolutely nuts because over the last month, there has been absolutely no sellers. Even despite debt ceiling worries, bears did not step up to the plate. I think they are in hibernation and they will remain in hibernation. That's because making money on the way up is so much easier, and really you do not want to stand in front of a freight train. So we're just trading the chart that's in front of us, and that's been incredibly great for us in May. And I'm so thankful for every single one of you. If you enjoyed the video, drop us a like. If you want me to cover something in specific, guys, I'll mention it in the comments and I'll do my best to do it. If you watched till the end and you did not enjoy the video, I thank you for your time and attention. Thank you so much, guys. I got a flight to catch, and I'll catch you in the next one. Bye-bye.
Oh, wow.